before I was always wondering, is there some, genius to this negotiation? I am absolutely convinced now. Not only is it total chaos, it feels like total amateur hour, and that they're indiscriminately trying to bully their way and just trying to see what's going to stick.
It was released on March 20th, basically
Yeah.
defining how artificial intelligence is now mandatory expectation for all employees, emphasizing it as a critical skill to avoid stagnation. Employees must show that AI cannot meet their needs before requesting additional resources or staff, and AI usage will be evaluated in performance and peer reviews! Exclamation point.
I am optimistic. Where the next 5 years, 10 years, I'm not, and it's okay. But don't bullshit the public that we're going to get through this unscathed on here. It's going to be painful, and we'll get through. And this discourse is not in this election for obvious reasons, why I'm not a politician. But the moment whoever party gets in here is going to have to face that.
All right, John, welcome back to the tank. How you doing?
Not bad, Matt. How are you?
I'm good. We were both on vacation, had a little bit of time to breathe over the last week here, but it felt like a working vacation for both of us.
Yes.
I think also there was so much happening in the media and around, obviously, the tariff news that my phone was blowing up every time I touched it. So I tried to put it down for as much as I could when I was on vacation with the family. But what did you take away, I guess, from the initial, day of reckoning, or whatever Trump and his team decided to call it, on the day of the announcements? Because there was a lot of speculation on what Trump was going to announce, but honestly, it blew out all expectations on what him and his team had delivered. And somehow Canada was saved a little bit from a lot of the news headlines, but it still didn't feel
really
like that. So what were your initial takeaways on the initial, Trump's plan of action on the reciprocal tariffs against China and so on?
So I'm going to put this into two different pieces. Let's talk specifically about the reaction of what Trump is doing, and then let's talk separately about Canada. So, the big question that I had, I know you and I have talked about it, is there some, strategy? Well, I think the strategy of what they're trying to do, I think they've stated it. And, you could agree or disagree. It's not that an unreasonable strategy. The question was the execution of the strategy. And as you and I had said, there was a strategy here that if they didn't overplay their hand, they could have pulled off, I don't know, call it a 10% universal tariff into the United States. And I think people would have said, you know what? Fine. It's the access to the U.S. market. It's the access to the reserve currency. It's the access to, the physical security. Fine. It's worth it. But to do what they did in the most asinine of ways, and that computation on how they did it and how indiscriminate it was, before I was always wondering, is there some, genius to this negotiation? I am absolutely convinced now. Not only is it total chaos, it feels like total amateur hour, and that they're indiscriminately trying to bully their way and just trying to see what's going to stick, not knowing or not expecting the reaction that they got. And frankly, I was somewhat shocked that the reaction for any normal person was going to be bloodshed in the equity markets, etc. And it seemed to me it wasn't only until the bond markets just literally shit the bed where they finally said, okay, hold on a minute. We need to finance our debt in the bond markets. This is not good. And that seemed to be the only thing that shook this loose. But, again, I fully expected, I've been expecting this for a complete global discombobulation, but not like this. And I think the United States is, and I don't think this was intentional, the rule of law of other countries and the respect that they have, irrespective of all the things that they may have done, I think have really damaged the United States. And I think that this might be more long-term damage than they might have expected.
Yeah, there's so many moving pieces to this game of chicken that they're playing with the global trade and the markets at the same time. Obviously, if you put it in a kind of order of sequences of what they want to happen first they need to refinance the debt, right?
Yeah.
That's going to have to happen $9 trillion or something like that.
Very soon.
Very soon.
This year.
6 or 7 months, I think, or something like that. They have to do.
I think it was October.
And it was looking really good that they were in a position to get the 10-year below 4%. And have a good chance of saving hundreds of billions of dollars of interest payments, right? Every single basis point, I think, was like, I don't know, it was $1 billion or something like that. But that went against them extremely fast. Right now, the 10-year, as we're recording this on Friday, is over 4.5. And the other problem is people are dumping U.S. assets.
The U.S. They're
dumping the U.S. in general. They're dumping U.S. dollars. They're dumping U.S.
treasuries.
Equities. They're using bonds and treasuries. And they're finding other ways to get this. And that's the biggest thing that I think concerns most people in the investing world, is that if the U.S. is no longer representing so much more of the global trade, the dollars that people hold, and the assets that they hold, it's going to be very difficult for them to recover. And during this sell-off, I actually ChatGPT'd how China would go about selling their U.S. treasuries. It's not a very cookie cutter way of doing it. So there's only really two ways for them to do it. One is in like third party countries. So they would go through like Luxembourg or Switzerland or something like that. And that would be the quiet selling portion. But if they wanted to make a political statement, they would do it publicly. And they would go up against the large brokers. We're talking JP Morgan, Goldman Sachs, or they would go directly to the Fed and they would ask them to buy them back. We have not heard those stories yet, but the volume at which it's transpiring on, I believe that, Scott Bessent could call JP Morgan's trading desk. He could probably call and ask them what's going on, who's selling, and they would be able to get to that. So I'm wondering if that news is not broke yet because they don't want to have that discourse, but it is showing that there is a lot of selling pressure happening around U.S. assets in general. And I don't think they anticipated that much revolt. And that's going to be the biggest thing for them to have to solve first.
And Matt, again, I am not an economist, and hopefully there's some that are listening that could actually answer this question. But where I also struggle is, as you know, when you have a trade deficit, the balancing is the depreciation of your currency, right?
Right.
Because it was the reserve currency, it never depreciated. So it was always a structural deficit. Now, with the discombobulation going on and the interest rates dropping, the U.S. was trying to get their answer to make their debts cheaper. However, their jobs market has been relatively robust, but the impact of the tariffs cause inflation. And what do you have to do? You have to raise your interest rates, which is contrary to your debt. So what the hell happens? Well, you're going to have to decrease your interest rates because that is the priority, but your prices are going up. Oh my God, is that stagflation?
I was going to say, there's only one word to describe that, and that's stagflation.
My God, is the worst of all answers. The United States triggered a self-inflicted stagflation situation. I'm not calling that's what's happening, but if it has, can you imagine the damage this is going to be creating for them? That's the part that baffles me in all of this.
Yep. Low growth, high cost is definitely not the words you want to hear come out of any economist's mouth these days. So in terms of what this means for Canada, though, John, it feels like Canada, obviously we're heading into an election in a couple of weeks here. And so we've got a lot going on. We've got the Bank of Canada cutting next week, apparently, is the prediction, another 25 basis points. They will have to. Then there's potentially one more cut after that. But who knows what happens in the next sort of 12 months after the election and the dust settles. But let's switch gears to sort of where we're at right now in the election in Canada. What are you hearing from CEOs out there, and how are people feeling? Because the polls are not showing very well for the Conservative Party right now.
Yeah, well, let's talk about Canada and the impact of these tariffs. And this is where it gets me rather concerned. So, to be very blunt, you know, Canada is going to be in a very difficult position. Canada was in a very difficult position before the tariffs. And it somehow seems that people have forgot the shit show that we've been in well before that. And the timing of our shit show for Canada could not have been worse. This tariff situation is going to put Canada in a recession. I think most pundits would say that as no longer debatable. So, what we're hearing in this election, in many cases, is, well, don't worry about it. We're going to soften the blow by handing out all of these nice little cakes and cookies. And it's like, folks, let's talk about the province of Ontario for the moment, who I think is going to get hit the worst. The auto sector will disappear. Frankly, it should have been disappeared in 2009 in the financial crisis. We knew this was going to happen. It's going to disappear and revert to the United States unless Canada decides to make their own vehicle, which could be an interesting possibility. But we got Magna here. Maybe they turn into an automaker. Who the hell knows? But the auto sector is going to go. What is going to replace that? Tell me now. This is the issues. So when we start talking about all the goodies we're going to give, and don't worry about it, and we're going to cover, and we're going to pay for your displacement and stuff. Well, where is that money going to come from? I think that we are misleading the public here on how brutal this is going to be. The optimistic news is, Matt, for 10 years, largely through the Council of Canadian Innovators, we have been pounding governments for whatever term you want to call it, but economic nationalism. We have to build Canadian companies that build our own stuff, whether it's physical or whether it's digital. The great news is, in the last 2 or 3 weeks, every single political or government individual has not been pushing back on me for the first time. And in fact, has been going the other way, saying, what can we do? So I think from that perspective, I am optimistic. Where the next 5 years, 10 years, I'm not. And it's okay. But don't bullshit the public that we're going to get through this unscathed on here. It's going to be painful, and we'll get through it. And this discourse is not in this election for obvious reasons, why I'm not a politician. But the moment whoever party gets in here is going to have to face that. And in my view, I am extremely biased to the way out is through an entrepreneurial way out, and they have to lead, and we have to build these companies and support them through it. It's not going to be state-led, and that's where I get deeply concerned.
Well, there's short-term and long-term views. You're taking like the entrepreneurial long-term building view, but in the short term, there's a lot of headwinds, right? We've got slow growth, just 1% annually in recent years, far below the US 2 to 3% growth. Who knows how real the US is as well. Unemployment as well is an issue. We've got rising costs. Obviously, 75% of Canada's exports go to the US. So these tariffs are a major threat.
And we have a debt that doubled in the last 4 years.
I was going to get to that, but let's just go through all the list of things. We've got a GDP that is going to potentially drop by 2.5% for next year if these tariffs stay in place. That's a huge headwind, okay? So on the optimist point of view, there's only two things in the short term that the Canadian government and policymakers can do to relieve some of this pressure. The two are lowering interest rates and devaluing the currency. That is the only way for them to provide value to people who want to buy our goods. Because if we are not able to produce enough and our dollars are not cheap enough for them to use them versus other ways of buying our goods, what do we have, John?
But Matt, here's the question I have for you. What goods are you talking about?
That leads into your point of view. So you have
This is where we are smoking it right now, is that we talk about these and I go,
Right.
what goods exactly are we talking about? Because we hollowed out. And now natural resources, we have them. Great. Start with your advantages.
Start with things that are already naturally there, not like things we have to
Right.
build for the future.
Like that's why, as a technology guy, and you're hearing me see natural resources, because I know this is the fastest way to ease some of the pain, but it can't just be extraction. It needs to be part of a value chain. So if you want to talk about battery plants, I don't want to hear you. I really don't, unless you're talking about we're going to use our own nickel, cobalt,
Yep.
graphite, lithium, etc., and we're going to use our own Canadian-based companies to do that. I think it starts off with natural resources because it's the most immediate thing. But the problem really is that we have to substitute our imports, and we got to start making a whole bunch of things. And it includes digital things. And that's why I say it will only get us to the promised land. And if we don't do that, we're only fooling ourselves, and we end up with a very low cost provider of things, or low value, and we never create the wealth that we're going to need.
I think it's very funny that two tech investors right now are saying investing in resources.
I know. I can't believe I'm saying
because we always complain about resources and real estate being the only thing this country has ever produced. But in this time of need, I agree with you, John. But
yes.
It's just the scale, though, at which you're talking about is pretty significant. So for listeners who don't understand how big Canada's resource sector is, we're the fourth largest oil producer and the sixth largest natural gas producer. Alberta oil sands and offshore oil fields in Newfoundland are those key assets that we obviously talk about the most. We have a ton of gold, okay? 15 billion annually in gold production, 8 billion in copper, 7 billion in iron ore, nickel, potash. We're the number one producer. We obviously have a ton of other things to offer, softwood lumber being one of the biggest, and forestry products as well, and pulp as well. So those industries alone, beyond just like the wheat and canola and soybeans and livestock and all those other things that we can do from the agriculture standpoint, they're huge. Then you've got the water and fisheries point of view. There's a lot of resources that we have a huge economy that is dependent on, that we should be talking about more. But the one thing I did hear from the Conservatives, and I have not heard from Carney yet, is this reinvestment tax break of investing back into Canadian companies. I love this.
It's a spectacular idea. No, absolutely. But this is part of the building, right? Is the capital availability to put behind the entrepreneurs. By the way, Matt, if I could just add, the resources is one thing, but again, it's a bit of you end up getting into the resource trap, right? So that's the thing that we got to make sure that we take to our advantage. But the other big things we got to look at, what are all the things from a sovereignty perspective that we'll need, right? Food security, energy security. When we talk about data, sovereignty of our data, all of our data is being powered by largely US-based data players who have the ability to extract that data under the US Cloud Act. We have communications. We have our telcos on here, but the world is going, space satellites. We got to have, our sovereignty there. So it's looking at all of the pieces that you will need to become a sovereign nation. And these are the things that we have actually blatantly ignored for the not only last decade, for the last 3 decades. And it's those things that we got to position ourselves today for as well, in addition to all the great natural resource comments that you just made.
Now, maybe just speak a little bit to the recent article, the open letter that was signed by 150 Canadian tech leaders from the CCI, the Council of Canadian Innovators, basically urging federal party leaders to outline plans for enhancing Canada's economic sovereignty and resilience during these 2025 elections. So can you kind of give a sense of like how this all came together? Obviously, Buy Canadian Tech is at the forefront, but you have some big name Canadian CEOs on the list here. So I know how involved you are with CCI. Give our listeners some background to this story.
Well, let me start off by saying those are the same policies for the last 10 years, that nothing has changed, which is the really sad story on this, other than it was been ignored for the last decade. So CCI was created 10 years ago on this basis. But essentially, this is what I was saying is really, now, again, you start off with the entrepreneurs, not the state, but you got to make sure that the state doesn't get in the way of things. And, for example, and, you'll see in their procurement, like knock it off with handing out subsidies, never mind procurement, to foreign-based enterprises on sensitive industries that actually compete against our Canadian ones. It's so absurd. And then on top of that, not only do they give the subsidy, then they procure from them. And then our Canadian companies who might service governments never get contracts from the Canadian government. Like, why is that? This is just absurdity. And now they're starting to see, again, I use the data center one. You and I had talked about it before. We give money to a CoreWeave. Again, nothing wrong with CoreWeave. I don't have an issue with that. And, I know some of it was supporting Cohere, who we're big supporters of. But for God's sakes, we have data centers here in Canada. And by the way, you likely will need legislation from the government to protect the sovereignty of our data and making sure that data that's extracted from Canadian individuals are not extracted and used by foreign governments. This is fundamental. And now all of these policies, and through that, that CCI letter, is the policy frameworks that would be required to ensure that we can build these Canadian companies.
Yeah, no, absolutely. And I think that's actually something that we talk about a lot here, but it's been talked a lot for a lot. And it's getting frustrating, John.
These rules on data and sovereignty, et cetera, were announced in 2018, just the same time as open banking was. So we're in the 7th year of asking for the same bloody thing. And we're asking again. But this time, what's different? The public is demanding it. That's different. And so now, and the part that I am going to be very frustrated about is, are you saying yes during the election and day one after the election, let's examine it a little bit more. And are we still back to the exact same, problem that we've had over the last decade? And that's where I have, lots of anxiety over.
I think there's a lot of alignment with what you and the CCI group have been vocalizing for some time. And the recent news that just dropped about Toby Luque's announcement at Shopify that I just got to get your take on, John. So for listeners who don't understand what we're talking about, there was an internal memo that was leaked initially. And then Toby said, basically, fuck it. I'll just share it with everybody because it's already out there. I'd rather have it come from my mouth than somebody else's. So he released the internal memo, which was basically titled GSD Projects, or Get Shit Done. And I loved it. It was released on March 20th, basically defining how artificial intelligence is now mandatory expectation for all employees, emphasizing it as a critical skill to avoid stagnation. Employees must show that AI cannot meet their needs before requesting additional resources or staff, and AI usage will be evaluated in performance and peer reviews. Exclamation point.
Yep.
I absolutely love this. I think it's a precedent for how all companies should be operating. Obviously, we believe that as investors in AI companies or AI infrastructure tools. But what are your thoughts on this?
Oh, I thought it was fantastic. I mean, Toby's been saying this for quite a while. You and I, in operating our own businesses, we don't look at headcount. We're looking at the adoption of AI. And, I think the interesting thing about Toby is a company of that scale doing that. For you and I, it's different. We have small businesses. His is very, very large. And, what I really love about this, as an investor for such a long period of time, and really from 2010 to 2020, how did companies measure their success? Increases in headcount.
Sure.
Well, how about at least keeping it flat and growing your top line? I'll live with that, because you're spending money on AI, but you're going to spend on average on a per capita basis less, one would think. And that Toby's taking it further, saying, well, why not decrease your headcount? That would be spectacular. Now, The only thing I do say is this policy, and given, our changes in immigration, et cetera, where this makes tremendous sense is over time, our working population is decreasing. And before, we always said the only way to increase your productivity was by increasing the number of humans. Well, Toby's actually refuting that and saying you don't necessarily have to. So it actually is the pathway to continued productivity, but with a declining workforce over the next few decades. So if you're not doing this or thinking about it this way, your company will fall behind.
Yeah, I think it definitely sets a precedent for companies. If his scale company can do it, obviously smaller companies like ours definitely should be doing it. And one last thing I got to bring it to your attention, because I definitely don't think you saw this, but it's going to happen more and more, is there was a company written about in TechCrunch, a fintech founder was charged with fraud after AI shopping app was found to be powered by humans in the Philippines. I can't believe this is the first time we've seen this article. So the listeners out there, there's an article written in TechCrunch, a CEO of a company called Nate, Nate, Albert Saniger, was basically created an AI shopping app that promised a universal checkout experience, was charged with defrauding investors on Wednesday. But the investors were not sort of small name investors. These were big name investors. The company was founded in 2018, raised over $50 million for investors like Cotu and Forerunner Ventures. Great VC funds, almost $38 million in their Series A alone. And basically users could buy from any e-commerce site with a single click, thanks to AI. That was sort of the reality that they were trying to build. But it relied on heavily human contractors and call centers in the Philippines to manually complete those purchases.
I know. Is that crazy?
Is that not crazy? Without human intervention, this thing would not have been basically possible.
Yeah. It was unbelievable.
Do you think this will happen more and more in 2025 and 2026, John?
Well, there's a big bullshit factor on AI. Everybody AI, and I would just say is $50 million of venture capital went in there by some very good name brand firms. My biggest question is, what did you do from a diligence perspective? Again, maybe it was a very sophisticated fraud on there, but when I read the article on TechCrunch, it sounded very, very basic. And perhaps in the frenzy of people trying to cut checks as fast as possible, didn't even spend any time understanding what the quality of the technology was.
Well, I guess if they would have just disclosed that there was human in the loop, which all AI companies typically have to say as well, because that's how you get the 100% accuracy, would this have never been an issue? Like, if that would be the defrauding part.
What they did say is there would be some circumstances where the human interaction was required for a more complex,
of course,
one click. So perhaps that's how they rationalize that they have a call center. But did you see they were expecting, I think they said 90% automation. It ended up validating it was 0% that was actually done on an automated basis.
I think that's the claim that people are making, is that if they're saying in the marketing and sort of material that this is 100% automated or 90% automated, when less than probably 50% of it is, that's the way it's describing itself. That's the fraudulent part. Because this happened to Presto Automation, right?
Right.
They did this as well, and they were called out in 2023 because their orders were also being done in the Philippines. So it's probably not the first and definitely not the last, but we'll see, John. Until next time, thanks for jumping in the tank.
All right. Thanks, Matt.